Kathryn, I want to dive right in and see if you have any advice for investors. If they're just waking up, they saw this huge drop off on Monday, this perhaps relief rally Tuesday because maybe Monday took it too far. But now we're indicated lower here again today. If I'm an investor waking up, what would you tell me? What should I be doing, thinking, feeling?
Well, Courtney, an investor that's just waking up will be deluged with some negative and positive news. On the negative front, you have Christine Lagarde coming out in a very alarmist and I would say almost ridiculous statement, which is that this could be worse than the 2008 crisis. The fact is that, as Mark Carney very aptly said, and I listened to his conference, this is a temporary phenomenon, which is not relatable to 2008 in the sense that the financial system and its utter collapse brought about that crisis, and it was devastating for many years, for 10 years subsequent. So this is a different scenario where, as he said, you can have the financial system playing a part to counteract the temporary, and he said it about 20 times, Courtney, the temporary impact of this viral concern. What I'm telling my clients right now is start to accumulate S&P 500. I think the valuations are attractive at current levels, and I believe that this period of time, Courtney, will prove in the down the road to have been an opportunity to buy.
Erin, what do you think? Have we hit the bottom? Is now a time to find some opportunity or not yet?
No, I still see this as potentially there's room for further decline. A couple reasons. One, we just haven't hit major levels of supports when you look at sort of the past 3 to 5 years where buyers really jump in, even looking at some support levels from 2018. And also on valuations, I think we could easily go to 15 times earnings and we're like at 16 and a half, 16. So I think it would be quite possible for us to decline another 10%. Again, this being temporary, I think by the time we hit fourth quarter, we start seeing more positive trends going back to normal life. We could have this massive rebound in the fourth quarter, which is why I'm advising clients to not do anything. I mean, if you certainly have the extra cash and you're willing to take that risk of potentially seeing new buys go down another 10%, and you have that stomach for that, that's great. But most investors don't, and so I'm advising that you stay with this.
Yeah, can I just jump in? It's impossible to time the bottom. It's impossible. No one can tell you when the bottom will be. So yes, you can go down another 2, 5, even 10%. But what I'm telling my clients is that this period of time, you can start today, you can start tomorrow. I'm not going to say when the bottom is. This period of time will prove to have been a time to accumulate positions in the broad indices, which are getting disproportionately impacted and are discounting, Erin and Courtney, the worst case scenario without discounting what is in the offing, which is subsidized loans to SMEs, just like Bank of England did today. Phenomenal response expected as well. A drop to zero on the Fed funds, and you're also going to get on the fiscal front, payroll tax cut, extension of unemployment insurance, coverage of health costs, and bailouts, in my view, of airlines and cruise sectors. If I'm right on that, then by year end, markets will be far higher than they are right now.
Erin, what do you think? Do you have any specific advice then?
So I'm not quite as bullish, and when this recovery, and it may even take until the beginning of next year to really fully flesh out until we really see positive news around the vaccine. But I would say, unless you really need that cash and you really need to reallocate to bonds to at very least stay on your overall allocation, I think the bigger issue is that if you were overexposed to equities, you probably no longer are. And in that case, you might just want to stay with your overall allocation. And really, I think most important is just minimizing trading because you don't want to have to do these whipshaws. So if you have cash sitting on the sidelines, that's fine. But for the most part, I think most investors just need to ride this out.